Hello everyone, welcome to today's lesson. Today we are going to learn one of the most important topic in accounting called double entry system. If you understand this lesson, journal entries, ledger and financial statement will become much easier. Don't worry if you are the beginner. I will explain everything step by step using simple example. Now let's first understand what the double entry system means. Let's start with definition. The double entry system means that every business transaction affects at least two accounts. What is a transaction? A transaction is any business activities involving money or value. For example, buying goods, selling goods, paying rent or receiving cash. Let's look a simple example. Imagine you buy a laptop for business and pay cash. What happens? First, business receive a laptop. Then, second, the business pays cash. So, two accounts are affected. First, laptop account, then cash account. This is why it is called double entry system. Every transaction has two effects, not just one. Can anyone think another transaction that affects two accounts? Now that we know what is it, let's see why business use it. First, it records every transaction correctly. Second, it helps us prepare financial statements such as income statement and statement of financial position. Third, it reduces the mistake because every transaction must balance. Finally, it keeps the accounting equation balanced. So, double entry system helps business maintain accurate and reliable accounting records. But what is the accounting equation? The accounting equation is the foundation of accounting. It is asset equals liabilities plus owner's equity. Let's understand these words. Assets are things the business owns like cash, building, furniture and equipment. Liabilities are the amounts the business owes to others like bank loans, money payable to suppliers. Owner's equity is the owner's investment in business. Let's look at the example. Suppose the owner starts a business by investing 100,000. The business now has cash worth 100,000 rupees. So asset equal 100,000 rupees. There is no liabilities and owner's equity 100,000 rupees. The equation becomes 100,000 rupees equals to 100,000 equity. Both sides are equal. This balance is maintained by double entry system. Now let's learn two important words in accounting, debit and credit. Many students think debit means good and credit means bad. That is not true. Debit simply means the left side of the account. Credit simply means right side of the account. These are just accounting terms. Whether we can use debit or credit depends on the type of account. So don't memorize them as good or bad. Instead, understand the rules. Let's look at those rules now. This table shows benefit to debit and benefit to credit. If an asset increase, we debit it. If an asset decrease, we credit it. If a liability increase, we credit it. If a liability decrease, we debit it. The same idea applies to owner's equity, revenue and expense. Don't worry if you cannot remember these rules today. The easiest way to learn them is by solving example. Let's start with our first example. The owner start the business with 100,000 rupees cash. Let's ask ourselves a question. Which accounts are affected first? Cash increase because business receive money. Cash is an asset. Asset increase on the debit side. So we debit cash. Next, capital increase because the owners invested the money. Capital increase on credit side. So we credit capital. Our journal entry is debit cash 100,000 rupees, credit capital 100,000 rupees. Let's move to another example. The business buys furniture by paying 20,000 cash. Which accounts are affected? Furniture increase, cash decrease. Furniture is an asset. Asset increase on debit side. Cash is also an asset. Since cash decrease, we credit cash. Therefore, debit furniture, credit cash. This example shows that even though both accounts are asset, one increase while the other decrease. Business purchase goods on credit. What does on credit means? It means business receive a goods now, but will pay the supplier later. Inventory increase because the business receive goods. Inventory is an asset, so we debit inventory. Since payment has not been made, the business now owes the money to the supplier. This creates liability called accounts payable. Liability increase on credit side, so we credit accounts payable. Next, a customer pays 10,000 rupees for goods sold. Cash comes into business. Cash is an asset. Asset increase on debit side, so we debit cash. The business also earns sales revenue. The revenue increase on credit side, so we credit the sales. Before we finish, let's look some common mistake many students think about. Debit means income. That is incorrect. Some students think credit means expense. This is also incorrect. Always remember, debit and credit are simply the right and left sides of the account. Always identify account type first, then decide whether to debit or credit. Now it's your turn. Pause the video and try to answer these three questions on your own. Think carefully which accounts are affected, which account increase, then which account decrease. Then write the journal entry. If you got them right, excellent. If not, don't worry. Keep practicing. Accounting becomes easier with practice. Today we learned what the double entry system is, why business use it, the accounting equation, and debit and credit, then journal entries using simple example. I hope this lesson helped you understand basic of the double entry system. If you have enjoyed this lesson, please like the video, subscribe the channel and share with your friends. Thank you for your watching and I will see you in the next lesson.